Hi, Prof and classmates. My name is Julian, and today my presentation is called Redefining Emerging Markets. So, what is an emerging market? An emerging market is basically a market with characteristics of one that is developed, but it's not quite there yet, and it can be invested in on a stock exchange, much like public equity of listed companies, like how we invest in Tesla, Apple, Facebook, etc. So the article I referenced from is called A Different Approach to Investing in Developing Countries, and this was taken in The Economist. So a summary of this article is that the aim of emerging markets is to offer diversified exposure to fast-growing countries, but the current definition of emerging market is quite vague and limited. I'll go more into this later, but overall the landscape of emerging markets has changed drastically. So the problem is that right now there's an inability to tap on smaller markets with large potentials, because usually the current definition of emerging markets is one in which they group the higher incomes together with higher weightages inside the index. And then on the other hand, the smaller countries with potential aren't receiving so much exposure. So we see this inside the Morgan Stanley Capital Index, Emerging Markets Index. We see how the top three countries, China, South Korea, and Taiwan, they have a combined weightage of 61%, whereas those other countries in grey, like Thailand, Malaysia, UAE, Philippines, Pakistan, they aren't receiving so much investments. It's only 22% inside the index's weightage. So investors aren't really tapping inside these countries. So the consequence is that these other countries will have limited growth. In order to transition from an agricultural-based economy to a developed one, you need a large influx of capital. And because these other countries have very little foreign investments, there's very little capital for them to work with, so there'll be limited growth overall. And also, investors aren't getting enough diversification because there's minimal exposure to smaller countries with the supposedly lower income. And these countries might be the ones with the highest room for development. So investors might miss out on opportunities if these countries actually start to do well. So my solution is to classify emerging markets of countries with similar growth models together. So previously we talked about how usually the higher income countries have higher weightages. But what if we think about it from a different perspective? So I'd like to introduce the new classical growth theory, which states that the three main reasons for steady economic growth rates are labor, technology, and capital. So what if instead of high income, we look at having higher weightages for countries displaying these three different characteristics? So for example, we could group countries with a high rate of population growth or very fast technological advancements, very quick, very strong technological advancements, or capital abundant countries in general. So for example, we could even look at export heavy countries like Morocco and Brazil. Morocco because it's a big exporter in automobile, and Brazil because it's a great exporter, one of the best in the world for coffee beans. So for example, we could look at which exporters are doing well. We could put them under the top holdings of an index. So we see how this index is different from the one previously, whereby these countries are not necessarily high income, but there's something that is focused on. And in this case, it would be exports. So my conclusion and final thoughts is that the current definition of emerging markets is outdated, and we could classify according to other factors outside of income, like what I've mentioned just now, population growth, technological advancements, capital, or even large exporters. And this can benefit both investors and countries. And my last concluding thought is whether there'll be a day where all countries are developed, because if there is, then the whole concept of emerging markets perhaps needs to be changed even more. So thank you so much for listening in, and I hope that you've managed to take something out of this. Thank you.